Please subscribe for more videos. Click the bell icon for updates.
What is an account number? An account number is a code which consists of unique strings of numbers and sometimes letters and other characters that identifies the owner of the particular service and permits access to it. An account number is usually 10 to 14 digits and is specific to your personal account. There will be 3 sets of numbers in a computer-readable font at the bottom of the check. The first number on the left is the 9-digit bank routing number. The middle number is the account number. The third number is the number of the check. The account numbers are attached to just any transaction a consumer or business make. In our electronic era, they are vulnerable to fraud. In order to prevent this, most account holders are getting accustomed to multi-factor authentication, which adds another step before accessing an account, such as fingerprint, voice activation, one-time password, etc. PAN, Permanent Account Number, is a 10-character alphanumeric number uniquely allotted to each individual PAN card holder. It is used to identify the person or taxpayer to file the income tax returns, open a bank account, etc. You can link your PAN to your bank account by submitting a copy of your PAN with filling the KYC form. KYC is Know Your Customer. After verification, the bank will link your PAN with your bank account number. What is accelerated depreciation? Accelerated depreciation is a depreciation method that allows greater deductions in the value of the asset at the earlier years. Accelerated depreciation helps companies shield incomes from taxes, as the higher the depreciation expense, lower the net income. The usage of the accelerated depreciation method is logical, as the asset is heavily used when it is new and most efficient. As the asset ages, it is not used heavily since it is slow phased out for the newest assets. Hence, the deduction of higher expenses in the first year of the purchase and lower expenses as the asset ages. Accelerated depreciation methods. Double declining balance method. Double declining balance is equal to 2 into straight line depreciation rate into book value at the beginning of the year. Sum of the year's digits method. Applicable percentage is equal to number of years of estimated life remaining at the beginning of the year divided by sum of the year's digits. For example, if the asset has 5 years expected life, SYD, that is sum of years digits, will be 1 plus 2 plus 3 plus 4 plus 5, which is equal to 15. What is absorption costing? Absorption costing is a method of calculating the cost of the product or enterprise by including both the fixed and variable costs or the direct and the indirect expenses. Fixed cost is the cost that does not vary with the change in the quantity of the production units. Variable cost is the cost which varies with the change in the number of production units. Absorption costing gives a much more comprehensive and accurate view of how much it really costs to produce the product than the variable costing method. The cost of the finished product will include direct materials, that is materials included, direct labor, that is the factory labor costs, variable manufacturing overhead, that is cost which vary with the production volume, for example electricity, supplies, etc. Fixed manufacturing overhead, that is cost which do not vary with the production volume, for example, rent, insurance, etc.